Welcome, Carrie, to the Legacy Lounge.
Thank you so much for having me today, Deborah.
It's my pleasure, and I'm especially excited because we're about to announce a great partnership between our firms. Stavis Wealth has become an anchor investor, and we're looking forward to a great long-term partnership there.
Well, thank you so much for that. We could not be more grateful and excited about your support.
And well, we've been knowledgeable about each other from a few degrees of separation. It wasn't until recently that we even found out about each other.
Yeah, that's true. Well, I've heard about you for many years, and your reputation precedes you in the most wonderful way. But it's true, we've had connections here or there, and people have even suggested to me that we should know one another. But not until this spring, on a fateful Saturday afternoon when I was working, I got an email notification. And as it turns out, I saw that someone from Stavis Wealth was viewing some of our materials. And I got so excited that even on a Saturday afternoon, I had to call my COO, Connor. And I texted him first to make sure that he wasn't enjoying some time off. I said, Connor, can I call you? I've got some really exciting news. I said, and I told him this whole story about what all I knew about you and how we were barely, at 1 degree of separation, and there were some personal connections involved. I said, someone from her company is looking at our materials. This is so exciting. And he took one look at that and said, wait, you may know the back half of that email address. I know the first half of that email address. And I said, what are you talking about? Well, it turns out that my COO, Connor, is a Columbia alum, and he had met your chief investment officer, who is also a Columbia alum, at a Houston alumni event.
Yes, Samir Sinha and Connor got together.
Yes.
And that's the only reason we actually physically met.
No, exactly.
Was because they brought us together.
Well, and I guess they were just exchanging emails on a personal basis, Samir from his Gmail for the record, and Connor happened to have a link to some of our materials in his signature, and Samir clicked on it, and now here we are. The rest is history.
The rest is history. Great.
Yes.
So tell us about your personal journey, beginning with where you grew up.
I grew up in a small town in the Texas Panhandle. Not only was it a small town, but it was very isolated. So it was a community of only about 7,000 people, but we were 2 hours from the nearest mall or airport or nice restaurant. And when I say nice, we're talking about a Chili's or Red Lobster. That would be a treat to drive to the big city and dine at one of those establishments. So very small town upbringing.
I had a very similar experience with a single mom.
Yes.
How did you learn to excel in a population of just a few thousand?
Yes. Well, to be frank, my childhood was pretty rough. My parents divorced when I was young, and then my mother remarried someone who was not a great person. And so my upbringing was quite abusive in nature. But I have to say that in many ways that propelled me forward. So I knew that through education, professional success, and faith, that I could rise above those circumstances.
You saw it as your ticket out of there.
Absolutely.
Yeah, okay. And so you were a great student, and you went to university in Texas. Tell us about that.
Yes. As I was finishing high school, as valedictorian, I remember my high school counselor connected me with the one engineer in town. And so I went to go meet with him at his fancy office, and he encouraged me to study petroleum engineering. In fact, he slipped a brochure across his desk and said, you should study this. This is what I am. And I had no clue what engineering was in general, much less petroleum engineering. But he said, look, if you'll apply, I'll put in a good word for you. And thus began my journey into petroleum engineering. And in fact, if you'll allow me to fast forward to just a few years ago, I had a full circle moment with this gentleman. His name is Mike Riley. Mike Riley is the only petroleum engineer, or was at the time, in Perryton. And, Mike encouraged me to study petroleum engineering. I ended up getting a full ride scholarship to study that and graduated at the top of my class of engineering at UT. And then, had a great career in oil and gas. I currently sit on the executive advisory board for engineering at the University of Texas. And a few years ago, I was there for a groundbreaking celebration for a new building. And we were having a celebration with the dean of engineering. And as I was speaking to the dean, I kept noticing this gentleman eyeing me and watching me and looking at me. And it was one of those situations where I just couldn't
Couldn't
place the man. And once I had wrapped up my conversation with the dean, he walked over and he said, "You don't know who I am, do you?" And I said, "No, I don't. I'm so sorry. I'm having a hard time placing you." And he said, "Carrie, it's Mike Riley from Perryton." Well, at this point, it had been probably almost 30 years since I had seen him or gone to that hometown. And he said, "Carrie, I've kept up with you every step of your way." And he said, "You are the only person that I ever recommended to the petroleum engineering department. And I have to say, you've made me really proud."
Oh, that must have been so satisfying.
It really was. It was
Yeah.
a nice, special moment.
And you still stay connected with the university.
I do.
Many levels. That's great.
Yes, absolutely. It's one of my favorite things. While I was working at Hilcorp Energy within the oil and gas industry, I was able to take a seat on the executive advisory board at the University of Texas for the Cockrell School of Engineering. At the time, the gentleman I worked for, Jeff Hildebrand, was on the advisory board himself, but he was getting promoted to be on the board of regents, and he asked me to take his seat. So that's how I came to be on that board. But here we are, a dozen or so years later, and I still really enjoy that involvement at the university. It allows me to stay, plugged into not only industry happenings, but what's going on with the younger generation on campus.
Definitely. And I know we fast forwarded, but
Yes,
what I
yes.
would like to do to understand better, not only were you top of your class, but you were a woman in a fairly low percentile of women in the industry. Do you remember
Yes.
when you were going to engineering school how many other women there were in your class?
Well, it was an interesting time, particularly for petroleum engineering, because as you know, that industry is very cyclical.
Mm-hmm.
I graduated at the valley of one of those cycles, and so I only had 12 people in my graduating class, and I was the only woman graduating that semester. So, and that's probably representative of the overall demographics at the time. So, maybe when I was in school in the late 90s, less than 15% of engineering students were women.
Right.
And I'm proud to say that, over time we've worked that up. I believe it's around 35% now. So
Great.
much better and still trending in the right direction.
Well, through it all, it doesn't seem like it was a hindrance to you at all, but you were rare among other students. How do you think that whole experience shaped you?
Well, I think it's something that's been a commonality in my life. When I was a child in that small town, I played golf competitively and worked at the local golf course. And so in a small town like that at the time, there were no women that played golf. So I was used to playing golf with a bunch of men. Then I studied engineering, and I was around a bunch of men. And then I entered the venture capital industry, which is very much male dominated as well. So, it's something that has been a common thread throughout most of my experiences. And I would say earlier in my career, I think I felt some sort of pressure to fit in and to, look like everyone else.
To keep up with?
Yes, because you wanted to look the part and sound the part. And so I would try to, pattern myself after those people. Many of them were great people that I admired, but that's not who I was. And so later in my career, I certainly learned to kind of embrace my unique perspective, my unique vantage point, because really, that's when we drive to better outcomes, is when we have complete diversity of thought and input at the table.
And integration
Absolutely.
rather than division.
That's right.
You learn to just, hang with the club.
Oh,
and,
yes.
And that it also separates you.
Yes.
Yeah. Well, so let's now talk about Hilcorp. You came out of school. Was that your first position out of college?
It was not. I was hired at Anadarko Petroleum, also here in Houston at the time. And so I spent about 5 years at Anadarko, and then I was recruited to go to Hilcorp. And at the time, that was an interesting financial decision for me to make because the value proposition wasn't obvious. Okay, Anadarko at the time was was known for paying top salary and top benefits. It was a large corporation, so there was that perception of
Safety.
security. And so I was being asked to go to this company that was a bit of a smaller upstart at the time. They did not pay top salary. And in fact, you had the opportunity to write checks back to your employer each month to buy equity in the company. And I thought, you want me to take less pay and then give you some of my pay back? What is this craziness you're talking about? But as I went to interview and had lunch after lunch with people that work there, I saw the passion in them. I saw the excitement to get to work and do their job every day. And it was all about this alignment of incentives. They were excited because they weren't just a cog in the wheel, so to speak, of a big corporation, but they were fully vested within this organization, given that they were owners in the company.
It's a really unique entrepreneurial experience as an employee, wasn't it?
It is.
Yeah.
Yes.
And it remains so to this day, I know.
It's a great company to work for. And, I kind of have some... a lot of questions I get are around like, well, do you feel like that was wasted, Carrie? I mean, did you're in oil and gas and now you're doing this. How did the two tie together? But, I kind of ended up in petroleum engineering in the oil and gas industry by accident. It was just where I got the best scholarships for undergrad. And then that was where I ended up. So I can't say necessarily that the industry itself was ever a big passion of mine, but what I was passionate about was business and leadership and entrepreneurship. And so that's what I discovered there. And I was privileged to learn so many lessons about how to create an organization that was nimble and acted with urgency and that, had this ownership mindset, from Jeff Hildebrand at Hilcorp.
And to learn that risk-taking can work very well.
That's right.
That it's not always a downhill trend. People talk about risky careers and things, but you ended up working for one of the, graduating from one of the best schools, working for one of the most successful companies. How did that experience inform venture capital, which you're doing now as CEO and founder?
It's a great question. While I was at Hilcorp, we scaled from less than $100 million in value when I started to in the billions when I left. And that is driven by a guy who has a mindset and a motto that says, get rich slowly. And so that has certainly worked for him. And so, it was all about doing the little things right there. It was paying attention to details. It was, doing the same things correctly over and over and how those little things can't compound over time. I think one of the most powerful concepts that I learned from him and the company was the power of aligning incentives properly. And so, that was really transformative for me personally, the way that he created the equity structure and the compensation structure there, in that it was, life-changing money for me. I was there during a lot of growth. And so as we would, buy and sell properties, we employees benefited from that just as much as the company. We had a motto that said, when Hilcorp wins, we all win. And certainly I won a lot by being there during a great time of growth. And so that afforded me the luxury to just step away from that industry and then say, I don't know what I'm going to do next, but I want to find out what my passion is. And I want to do something that I'm really interested in personally. I want to take the lessons I've learned here and use them in a different arena. And so, I left without a surefire plan. I didn't have some master plan or business plan.
You didn't have a 5-year business model when you walked away.
Not at all. I didn't even know what I was going to do next.
Okay, interesting.
I completely stumbled into
but
what I'm doing.
Let me back up for a minute. Even at Hilcorp, there probably were people who didn't write the checks, who didn't participate on that level. They might have had a very different experience than you did. It doesn't work for everyone.
That's right. And I was fortunate at the time. I was single, no children, and so I had a lot of disposable income that I was able to invest back. But that's what I did. Faithfully, steadily invested month after month in every deal that would come up, every opportunity.
So there was diversification.
That's right.
In that.
That's right.
And you were willing to take a risk, but you were moderating that risk by diversifying among
another one of my mentors there, an executive on the leadership team, had a phrase that he would repeat, say, don't put all your eggs in one basket, but make sure you have eggs in every basket. Because each month the company would be acquiring new properties that we as employees would have a chance to buy into. And, from my technical standpoint, sometimes the ones that I would expect to be successful weren't really the ones that were most successful. But thankfully, I did, just kind of steadily invest, every month. So I
That's
had
a really
interest
great
across
point.
all
Every
of those
month,
properties.
many different companies. So any idea, just give me a range, the number of opportunities that you evaluated for yourself and for Hilcorp while you were there.
Certainly. So the way the structure worked was that as the company would acquire new oil and gas properties, about once a month they would offer up those properties to employees. And so, in any given year, you might, have an opportunity to invest in, 10 or a dozen new deals.
So did you do your own due diligence on those? On each
Thankfully,
of those?
I had the technical background to evaluate
The
those.
interest and the inclination to do that.
That's right. That's
Great,
right.
great.
And but they also would hold, open book meetings with all other employees who could sit and learn from the technical experts about each deal and make their own informed opinions. So it was a very empowering situation. And, I really try to copy a lot of those examples in what I'm doing now.
That's great.
Yeah.
And now you are in venture capital yourself. And what can you tell me about, was that just an obvious choice? Did you know
Not at all.
that you were going to wind up there?
Not at all. So let's talk about what an indirect path this was. So while I was at Hilcorp, towards the end of that career, again, no kids, lots of income. I was traveling around and doing a lot of fun things, going to a lot of beautiful places, traveling around to fashion weeks around the world, and just
Incredible.
doing a lot of adventurous things that were interesting and photogenic in nature. Well, I happened to sign up for this app the week it launched called Instagram. And
The week it launched?
Yes.
Wow.
I think it launched on a Tuesday, and I was on there on Thursday. And so I have a very short username. It's just at Carrie C, my first name and last initial. That's because I was there in the early days. And so back in the early days, you could just post pretty pictures and become very popular on Instagram.
Wow.
There weren't algorithms, and you didn't have to generate video content. You could just compose a good picture. And I've always been into photography as a hobby. And so, as you can imagine, when you're traveling to tropical destinations or international destinations or fashion shows, that's easy to photograph and post. And so back in the day, there was actually a popular page on Instagram. And so I would frequently be on the popular page. And so I grew a following that was decent sized in the early days when it was easy to grow. I mention that because that is actually what led me to what I'm doing now. And what do I mean by that? Well, think about this. I had just left Hilcorp, and so I was sitting on quite a bit of liquidity. I didn't know what to do with all this extra, cash that I had on hand. And so as a accidental influencer, I started getting these paid brand opportunities.
Interesting.
So this was in the Wild
Very
West
early
days
in the
of
days.
influencer marketing. Brands would say, hey, Carrie, we'll pay you $5,000 to post about, our new product coming out next month. Okay, or we'll pay you $10,000, or we'll pay you $2,000, and you would do continual deals with those that you liked. Okay, that worked out pretty good. Let's do.
And what year was this?
Oh goodness, this would be like 2015, 16.
Really early in
Yeah,
that development.
yeah.
Okay.
And so then I very naively took my next step. I would ask the brands that I liked, hey, are you looking for investors, or are you looking for board members, or do you need a mentor in business? Do
Oh,
you need an
funny.
advisor? And so that's how I started investing. So hopefully I learned on my own dime, but for about 5 years I invested my own money, over 7 figures, into what happened to be female-founded consumer brands.
And I was going to ask how consumer products first, and then was it just the track that you were in were women-founded companies?
Yeah.
And so that's the track you took.
I think it was naturally what I gravitated towards as I was doing these brand deals. The companies I liked happened to be female founded. They happened to be consumer products. And, so I spent about 5 years investing in those sorts of brands on my own dime and really learned at least 3 incredible lessons that led to me then starting Curate Capital. And that is, one, I was having great fun. And I would not have used the word fun before to describe my career. It was a great career, but fun probably wasn't the first adjective that came to mind. After that, I would say I was having great results. I was seeing that with just the infusion of capital, along with some mentorship and advisory services that I was providing, these companies were having accelerated success. And so then number 3, I saw the great opportunity set. What do I mean by that? Well, I saw that women are underfunded, yet over-delivering. And so that means that investing in women just
There must
makes,
be some great stats on that.
Yes, absolutely. So women still get less than 2% of venture capital dollars in the U.S. I believe it was 1.8% last year.
Okay.
So it always bounces around that 2 number, doesn't move up and to the right consistently. I think the highest it's been is 2.4%, but now we're back at 1.8 or 1.9%.
Okay.
So underfunded, yet there's study after study that shows that women are more capital efficient, meaning they deliver higher returns for every dollar invested.
Okay.
And actually, just this year, a new study has come out showing that women are creating disproportionately the unicorn companies that are existing.
Wow.
So even with less than 2% of funding, I believe women have created 40% of the unicorns
So they're getting
in recent times.
outsized returns
That's right.
comparatively.
And so-
yeah, that's really exciting.
As an outsider to this space, as I was considering starting a venture capital fund, I surveyed the landscape of other female-focused funds. And, this is not meant as shade to any of them. Everyone has their unique perspective. But I saw that most of them led with how bad it is that women get so little funding. But I have a different perspective, and that perspective is that women are building incredible businesses. So, you could think of it as the carrot versus the stick approach. When I got into venture capital, I wanted to turn things on its head, so to speak, and look at this a little differently. As an outsider, let me come in and make a splash with, some well-branded and well-marketed materials. Let's talk about the good things that women are doing. I had no interest in coming into the space and looking and sounding like all other venture capitalists.
Well, and you weren't expecting people or women or anyone to invest because it was a women co-founded company or founded company. You
Yes.
just wanted to be the best,
That's right.
man or woman. It would
That's right.
just
Yes.
like you did in your petroleum engineering class,
Yes.
and just like you did at
And
Hilcorp.
I'll tell a funny little anecdote from when I was raising Fund One. I got a lot of interesting questions as I was fundraising. Side note, I had never been in a fundraising role before, so that was a steep learning
Okay.
curve for me. But as I was going out to, my colleagues from oil and gas, who of course are mostly men, but men who had known me for 20-ish years at that point. I'm like, this is what I'm doing, and I talked about the female focus, and a lot of them is, oh, Carrie, what's happened to you? Have you gone off the deep end and become a leftist feminist or something? I said, no,
That's funny.
Let me show you the data, about why this makes good business sense. I am not doing this, to be agenda driven or for philanthropy or charity. This just makes good business sense.
Yeah, I really admired that. And you stepped into the VC space, and for our audience, they know that there are many flavors of VC, many series, if you
Yes.
will. It's hard for them to know exactly where you are in the chain. So can you talk about series in general, and then why you chose the spot that you did?
Absolutely. I will again point out that I came into this as an outsider to this industry. And when I first came to the industry, another thing that surprised me was how much people would almost wear it as a badge of honor how much capital they had raised, not how profitable they were.
Interesting.
Right? Yes, and I came in during a time where it was easy for founders to raise money, and so they were raising tens of millions of dollars and almost comparing themselves to other founders based on how much money they raised. Well, I raised 20 million, I raised 30 million. How much money have you raised? It was literally a badge of honor.
That's
that they-
fascinating. I detected that in financial services because it was always about how much capital you brought in, not necessarily if what you were investing performed the best.
That's right.
And it was really lopsided in that regard. So it's interesting to hear that there was a similar.
Right. And keep in mind the perspective I was coming from at Hilcorp in oil and gas, where we paid attention to the details. We paid attention to the underlying fundamentals of the business.
Right.
Every expense, every line item in the budget, everything mattered. And so I bring a different operational perspective, I think, to things than maybe some VCs. So yes, the perception is that VC is very early stage, that it's very risky, and these companies lose money. And that is true for many venture capital firms. I would say that we take a little bit of different perspective, both in how we view companies, but also what stage we play in. And so, as I learned on my own dime, I had a larger risk appetite than I do now as a fiduciary. And I will say I made some very early stage investments at that time, but I learned that's not really where it's best for us to be as Curate Capital. So where we like to come in now, I would call it either late seed or early Series A. But to be more specific, because those definitions can get pretty fuzzy, we like to come in when the company's already generating significant revenue. I think on our website we may officially say north of 3 to 5 million. Actually, I'm finding myself gravitating towards much larger companies. The first deals we've done out of Fund 2 are more in the 10 to 20 million range of revenue. So
these are not tiny. I mean,
That's
there
right.
are millions of private companies in America. And
Yes.
It's very hard to distinguish who's in what stage of maturity among those.
That's right.
But in your case, you're looking for companies that are already have robust revenue, and they may even be generating profit.
That's right. So these are companies that have found product market fit. They are generating revenue, and they are ready for that infusion of capital that's going to take them to the next stage. They're ready to have that hockey stick moment of growth. And so another reason that we come in at that stage, not only is it de-risked, but that's where we know we can add the most value. So at Curate, we've put together a whole ecosystem of resources for founders. But what I'm particularly proud about and excited about is this influential investing program we have. And this is a program that we pioneered based on my experience as an influencer. I wasn't even that big of a deal on the internet, but I saw that companies were excited to have me as an influencer invested. And so when I started Curate, I thought, how do we get this at scale? And so what that program entails is harnessing the capital of influencers, so they have the opportunity to invest in our fund, but then also harnessing the power of their services. And so then they help power the companies that we invest in. And so it's a very powerful model that becomes a win-win-win scenario, benefiting not only the brands we invest in, but also our other investors benefit from this model.
Now, that sounds pretty unique to the venture capital industry.
Yes.
So,
I have to say that we are
very
the only
innovative.
ones doing this at scale in a diversified manner. There are a lot of companies that are granting influencers equity, or maybe they have a few influencers who invest. And there are some funds that are trying to leverage creators, but I really think our model is the first and foremost in terms of being sophisticated and offering the influencers a diversified portfolio of investments. Because there certainly has been a wave of creators and influencers wanting to get these equity opportunities. And they have tried to invest.
They've seen sales go through the roof when they're involved, so why wouldn't they want to participate in that upside?
That's right. Yes. There's a perfect example with Fund 1 as I was pitching various influencers, who, by the way, 100% said yes in Fund 1.
Wow.
And they invested their personal money into our fund. But there was a specific example they would always bring up. There was a skincare brand that launched maybe around 2017 called Tula. Tula really leaned into the influencer marketing world. They were one of the first companies to go all in on that. And
And just to take a side trip for a moment, many traditional marketing approaches have failed companies, and so this is an alternative to enhance distribution.
Absolutely. And in fact, this is where companies are putting the bulk of their marketing budgets these days.
Is it?
Absolutely.
The bulk?
Oh, yes, I somewhere between 70 and 80%.
I had no idea it had gotten that high.
Absolutely.
Okay.
And side note, there are different types of influencers. Some convert better than others. Some are good for brand awareness, like celebrities and models and such. But these women who I would fashion as the girl next door, they're relatable to their audience. Those are the ones that convert and drive a lot of sales. And so, as we
It's
were...
based on their life experience and really looking at those products carefully, and were they useful to them every day?
That's right. And it goes right along with our thesis at Curate. We believe that women are building the products and services they wish existed for themselves, and those influencers are the ones using those products.
Another
right?
reason why they're innovative products. Yeah.
Absolutely.
So how do you choose the portfolio companies that you invest in? And tell us about, you're noted for great due diligence. Tell us about that.
Yes, thank you. Well, I'm glad that I have support in that area. My COO, Connor, has brought a wealth of knowledge in that area and has really leveled up our abilities in that realm. And so he's came in and really systematized and productized how we do due diligence.
What was
Because
his background before he came to Curate?
he is from the Boston area and so has no shortage of VC opportunities there. But since he's not here to tell his story, I will though. He says that everyone looked alike and sounded alike. He said, but I just wanted to do something different. And he said, when I met you, Carrie, and got to know you, what you're doing is truly different. And so he worked for a lot of family offices in the Boston area and had a bit of a more traditional VC background than I do. In fact, he's a professor at Boston University teaching about VC and innovation and strategy and such. And so, I really appreciate him seeing the vision and then coming on board and making my ideas happen. But in terms of diligence, he has built out this whole ecosystem of support for founders and for our portfolio companies, but also to help us as we diligence. So we start with this screening scorecard, and then we have a strategy guide that founders fill out, and we have this whole process that we use. But I will say that the top of the funnel, he's actually brought in some AI tools to help us screen.
I was just going to ask.
Yes, because we see such quantity of deal flow. Each month we are screening over 100 to 200 inbound deals a month.
And are these all consumer goods?
Most fit within thesis,
Okay.
yes. And so, we're getting the quantity of deal flow. And why that's so great is that gives us so much data on what's going on in the market. But really what I'm most excited about is the quality of deal flow. And so what I mean by that, I truly believe that we are seeing the best consumer deals across the country right now. And that's what excites me the most about this job, is getting to see the innovative ideas that founders are birthing and bringing to life, bringing to market and scaling. And I just love when we connect with a company that's just primed for where we know that we can be helpful.
Well, not only are you investing in these companies, but often people want you to be the lead investor, and you do more than investing. You have involvement. Can you speak to that and what you do with some of these women-founded consumer product good companies?
Absolutely. Many VC funds have a strategy of getting smaller checks in many companies, and that is totally fine, and that may be very successful. In our case, we do like to write a big check and lead around because we want to have influence. We talk about influencers. We like to be influential as well in other ways. And so our preference is always to lead rounds and to take board seats. And if they don't have a board, help them create a board and level up their governance.
Okay.
Because we're trying to help them get to that finish line. We're trying to help them keep the end in mind, right? Whether that's acquisition, IPO, or a growth round of equity, we want to help prepare them for that. So that could be getting their financials in order. Many times their financial model, their financial statements aren't really set up.
They know what they know about their product, but there's a whole array of financial decisions that they're having to make all the time about how much capital they seek out and how much they borrow.
Yes.
So do you help them with some of those decisions?
Absolutely.
That's amazing.
And you're right. Let me point out, the founders know their business better than anyone else. And so I'm certainly not stepping in claiming to know more, but I think we do have some expertise in areas that they just may not know about yet, whether that's preparing, for the next stage of growth or acquisition, could be the financials behind the scenes, the operational details, whether it's inventory or warehousing logistics or, distribution help. We've got all those capabilities
and by
built
staying
within
in your
our network.
niche, you really have been able to become expert over many years.
Yes, and I'm certainly not, an expert on everything, but we've got that network around us and that support around us who really can answer those questions for any issue a founder may be facing at the stage in which we invest.
So everyone wants to be, not everyone, but a lot of VC companies want to be the lead investor. You've been chosen, probably not just by women-founded companies, but by many. But what, in your experience, has been the reason that they pick you?
I'll tell a little story to answer that question. there's a company I had spent 2+ years getting to know. They had first reached out to me in early 2023 about a fundraising round they were doing. Well, it didn't make sense at that time for a multitude of reasons. You know, a lot of things have to align to make a deal actually happen. But I was very impressed with these founders, and I wanted to stay in touch. And so they added me to their quarterly investor updates, and I followed them on social media, and they followed me. And we just stayed in touch over a couple of years, casually, online, but then also, I would get their updates. And as you can imagine, when I connect with a brand, they most often have very aggressive growth curves forecasted in their pitch decks. Now, very seldom do they actually achieve those results. But as I was watching this company, every quarter when I would get their updates, I would track it against that original pitch deck they sent me. And I kid you not, these women were beating their forecast every time. And so they had an ambitious goal in front of them, and they just kept surpassing
Women
it.
or not, they were just goal setters, and they were racing.
Yes. And so at the beginning of this year, they reached out and said, hey, Carrie, we're going to be raising our Series A this year, and we would really like you all to consider leading. And I said, well, that's great. However, I don't have any money right now. Fund 1 is fully deployed, but we are going to start raising Fund 2 later this year. We plan to do a first close in the summer, but if that doesn't fit with your timing, we completely understand. You have created a great business. They're profitable. They're fast growing. I knew they could have the pick of the litter, so to speak, in terms of who would lead their round.
Yep.
And I said, as much as I admire y'all, I understand if the timing just doesn't align. But thankfully, they said, no, Carrie, we really want you involved, and we're profitable, so we can wait a little bit. We can craft our timing and flex it around you and your availability.
Wow.
And that's exactly what happened. And so, kind of simultaneously with us doing our first close of our second fund this summer, we also deployed our first capital into this first investment. And, it was a real testament to what we're building. And the takeaway, I think, is this. Sometimes if you're just a decent person and a good person and a relatable person, that goes a long ways.
And you've answered questions along the way that mattered.
Yes.
When they needed you, you were there.
Well, and I'll say that this founder also shared some things with me personally that I'll keep confidential. But it's surprising sometimes that still in 2025, women face some challenges, I think, that are unique to us in business. And, what she shared was not a case of a young person being too sensitive or, blowing something out of proportion. But there really are some things that happen to women that are derogatory or misogynistic in nature, that are just really unthinkable in this day and age. And so, it's unfortunate that stuff like that still happens, but I am glad to be, an approachable, relatable, confidant and advisor for these women as they scale their businesses. And I think that is really important to them, to have someone they can relate to, someone they can perhaps even look up to. And so that in itself is getting us into a lot of doors. I like to say that we're, our reputation outsizes us, so to speak. I only started this 5 or so years ago, but the deals that we're getting to not just be a part of, but lead, is much bigger than what we are.
That's got to feel really good.
It is.
Incredible. So some of your differentiator really is, because you've selected women-fueled VC also. And as you just explained, there's nothing biological about financial knowledge or running a business, but sometimes there is a little bit of a bias that women don't embrace finance or don't embrace running P&Ls.
Right.
And it sounds like they were wrong about these two individuals. They were pretty savvy.
Yes, indeed.
But it must be fun to help women that way.
It is.
So you see hundreds of deals a month. So then how do you actually select the companies you end up investing in?
Well, that's a good question. Certainly we have processes and systems, and we have spreadsheets and algorithms that we run things through. But at the end of the day, in many ways, I'm investing in the person or the people as much as the business. And so after almost 10 years of doing this, I think that one of the ways I like to de-risk our investments is getting to know the people over time. And so my favorite ways to do an investment is to, start forming that relationship well in advance of when we're going to make that investment decision. That is just risk mitigation for me.
Yes.
In the case of this deal that we've done, I have 2 years of watching these women execute their business plan and succeed, right? So that in itself is a way that I get comfortable doing a deal, and I always tell them it's just as important that they get comfortable with me, because this is a two-way street, and we're in this for the long term.
Yeah,
this may
it's
be
not like they're
5
selling a
or 8
copier. This is their life, and if you're willing to take the journey with them,
Yes.
and trust and networking is a big function in the VC arena, isn't it?
It is. But as an outsider originally, my networking, I would say, may look different than other VCs. I'm not concerning myself with going to venture capital conferences and conventions and retreats and such. I'm meeting founders where they are. So I will go speak at conferences that are more geared towards founders in the CPG space, or in the female founded retreats and events and conferences. And so I'm more concerned with connecting myself to founders and also some influencers than I am necessarily all the VC industry.
And right now,
professions.
it's a reasonably small niche, but I imagine it's growing really fast.
Absolutely. The stats say that women are starting, I think, 45% of businesses these days.
More businesses
And
are
more
in
of
some
those-
other studies than men.
That's right. And
Getting more advanced degrees.
and getting more
starting
scale
more new
to the
businesses.
businesses as well. Yeah.
Yeah, great. So that niche is obviously important. So the companies in your portfolios, Fund 1, Fund 2, they are entirely women founded.
Yes.
Okay.
Yes.
But that's not because they're women. Your due diligence tells you that they are good with numbers. They know how to stay on track and even exceed plans.
That's right. And I'll say that we are not exclusionary in terms of who we want as an investor or a founder or anyone. That's not the thing. I truly think we're all better together, with a mindset that is inclusive of, everyone. And we're super grateful to have many men as allies. I know you have
Absolutely.
Samir as your chief
Investment
officer, and my chief operating officer is a man. And so we are thrilled to have men on our side as teammates, helping the cause, so to speak.
Well, and different cognitive thinking. Their
That's
backgrounds bring different experience and different solutions. So it's
Absolutely.
really, that integration has always been the best
Yes.
recipe.
Well, and that actually is a perfect segue into a success story I wanted to tell you about.
Great.
From Fund 1. Our most successful company out of Fund 1 currently is a wonderful beauty brand called Live Tinted. Well, it was started by a native Houstonian, actually.
Wow.
Her name is Deepika Mudiala. She accidentally became a beauty influencer. She posted a YouTube video, and I think it was her first or second video she ever posted, went viral. She had a real hack for how to cover up dark under eye circles. And she has darker skin tone, and so that was a real problem she was facing in terms of how to do that. Well, that video went viral, and I've got to give her so much credit. Rather than allowing that to just be her 15 minutes of fame and become an influencer, which she did.
Did she have millions of views?
Yeah, absolutely.
Oh,
She was on the Today Show and
Wow.
got all sorts of national press
Okay.
from this innovative hack.
Okay.
And I believe the hack centered around putting red lipstick under your eyes. And it makes
Oh.
the darkness disappear. And I'm no beauty expert, so don't quote me on that. But go find the video and you will see the secret there. But she took that as momentum to launch her own beauty brand. And so she launched.
That's what started it.
Absolutely.
Wow.
Yes. And so she launched
But she
Live
had a
Tinted.
purpose.
Yes. She wanted to create a beauty brand that catered to all skin tones, all skin tints, I should say, given that it's called Live Tinted.
Tinted, yeah.
And so, again, her idea was not to be exclusionary, rather inclusive of all skin tones. And so she started this company. And when I invested first 4 years ago, the company had done less than $4 million in revenue. Well, now that company has grown by leaps and bounds. They are now the best-selling and fastest-growing company in their category at Ulta, and they are just doing tremendously. And so we are so excited to support them even more with an investment out of Fund 2 now.
That's exciting.
Yes, it's really neat to see these companies scale and grow and to be able to support them repeatedly. I think this will be the third round that we've participated in her company.
Very exciting.
It is.
You tell another story about a couple of gals that creatively designed an iron.
Yes.
Can you speak to that?
Yes, absolutely. This company has been one of my favorites to get to know over the years, and it is a company called Nori. It is the word iron spelled backwards, and it's really a great story. Courtney and Annabelle.
It's a private company. We're not touting a public stock here, just to be clear.
And we're just
for our
storytelling
viewing
about
audience.
the founders. Yes, yes. These two women were college roommates who didn't really have room for an iron and ironing board in their dorm, and so they were using their hair straightener to iron their clothes. And they thought, why don't we create an actual device to do this? And so, sure enough, they created a patented device that is kind of like a combination steamer and iron. It looks very much like a hair straightener in form, and they are just blowing up. I'm so proud of them. They have grown just by leaps and bounds over the years, and now they've rolled out in Targets across the country. You can also get it at the Container Store and on Amazon and all sorts of things, but I do believe that they're doing so well in Target that Target's doubling down. And so those two women are a force to reckon with. They have been featured on the Forbes 30 Under 30 list. They've been on Oprah's Favorite Things. And I have no doubt that the accolades will keep rolling in for them.
Very exciting. And so why do these companies not just go public?
Yeah, it's a good question. I think what I love about the consumer realm is that you can have a successful outcome without going public, okay? And what I mean by that, the businesses that we're investing in really do not have to be super capital intensive.
Okay.
And so a lot of these founders are choosing not to over raise in terms of capital because they want to retain control. They want to retain the power to grow their company as they envision that growth.
And not be forced into the capital markets to raise funds.
That's right. And so what we're seeing many times is that these founders retain control longer, but then they can be purchased by some of these big corporate conglomerates or maybe a private equity fund.
So that would be the normal track.
And that would be the exit. And so, they don't necessarily even need to be a billion-dollar company. Certainly we would love to have some unicorns, but we don't need that for it to be a successful outcome because they're raising very little capital in many cases. They're driving to profitability early. And then that really opens up all sorts of potential outcomes that could all be successes.
Sometimes investors think that venture capital is just inherently risky and there's no way to mitigate that. How would you approach that?
Yes, that's certainly a good point, and it's a perception about venture capital investing. However, I would say not all venture capital investors and funds are created equal. And so you have to look across and see exactly what they're doing, peek behind the curtain, so to speak, and really evaluate what types of businesses and what stages they're investing in. And so, I like to think that we do de-risk our investments by investing in later stage companies that are revenue generating, they've got solid product market fit, and they also are even profitable in many cases. And so we're just helping them get across the finish line. In the old days, many of these companies may have already been public, but in this day and age, many of these are staying private longer. And so, we're just helping them get to the exit line. So I do think that we are coming in at a stage that is much less risky than, those early stages. As an individual investor before I started a fund, I actually had a higher risk appetite and experimented some with that and learned that those time frames can be too long for my liking and the risk profile is a bit too aggressive for my liking.
And the type of companies there are more in an idea
That's right.
phase. They may not even have an actual product that's in production, right?
Yes.
It's a great idea, but there's nothing, that you can really nothing concrete to put your investor hands around.
I put it this way. At Curate Capital, we are not helping you build your product from scratch. We are not capital to put on as a Band-Aid and fix your problems. We are accelerant to help speed
Okay.
up that growth.
Many of our viewers are going to watch this and being so impressed with your success in your career. They're going to wonder what the keys to your success are. And so if you could tell your younger self what to do, what kind of advice would you give?
That's a great question. I ponder that a lot, not only for myself, but I now have 2 young children. I had children late in life, and so even though I'm a little older, I have young ones who are a daughter who is only 8 years old and a son who's 4 years old. And I think about what I would want her to learn, or as you said, my younger self, what I would like to tell myself. I certainly didn't come from a background of privilege or means, or really even there wasn't a lot of wisdom imparted to me in these realms. And so, if I could go back, I think I would really just want to tell myself to bet on myself, believe in yourself, invest in yourself, because no one is going to be a better advocate for you than you. And, that's taken a lot of years and time for me to really fully embrace, but I would bet on myself every day. I know that I can overcome any challenge. And I have had some audacious challenges, even in recent months and years. But I know that I'm up for the challenge. And no one, including myself, should ever underestimate me, because I am competitive by nature, I'm curious by nature, and I am competent. And so I will overcome any challenge put in front of me.
And yet, it is hard when you're hit, when you're down. Is there anything that you tell yourself when you get to those places that kind of get you back on track?
Well, I think I've learned with time, that phrase, this too shall pass. So when you're going through a hard season, keep in mind it will pass. But also when you're on the mountaintop in the good times, know that this will pass as well. So as cliche as it may sound, I try to really live in the moment and only worry about what I can affect right here and right now.
I think you are just an inspirational figure to a lot of women, and this company, Curate Capital, it's just differentiated in so many ways, and I know you're going to be very successful. So we certainly want to stay very connected as we are. And so thank you for coming to the Legacy Lounge.
Well, thank you, Deborah, but I would be remiss if I didn't sneak in a compliment towards you as well. Your reputation has been so stellar in this community, and I have looked up to you for a number of years, and it's been incredible to get to know you. So thank you for paving the way for so many of us.
It's been serendipity that we got to
Absolutely.
know each other.
Yes,
Thank you so much, Carrie.
thank you.